some of the positives like regulation and stuff like that, and money flowing into Bitcoin as if we get a spot ETF could adjust that. But for me, it's just it doesn't seem like we've had. To me, we never had the flush out in crypto. And granted, that could be more in the alts, but bear markets notoriously get people to throw in the towel. The last time we were this high on tech stocks was in the dot-com bubble.
Pro trader Gareth Soloway highlights the likelihood of history repeating itself. From 1995 to 2000, the United States experienced a significant increase in stock prices of internet-related companies, known as the dot-com bubble. As a result of the bubble, the stock prices of many internet-related companies skyrocketed. The price of Amazon stock rose from $1.91 per share in 1997 to $106.09 per share in 1999. The dot-com bubble burst in March 2000, with the technology-heavy Nasdaq Composite Index peaking at 5,048.62 on March 10th, more than double its value just a year before. The index then proceeded to fall by 41% in the next 4 months, reaching a low of 3,004.58 on July 17, 2000. However, the market then rallied by 41% in the next 3 months, reaching a high of 4,295.49 on October 10, 2000. Recently, the S&P 500 and the Nasdaq 100 indexes break above key resistance confirms that the 2022 to 2023 downtrend has ended, raising the odds of a resumption of the long-term uptrend. On Friday, the Nasdaq wrapped up the first 6 months of the year with a 1.5% rally, bringing its gains so far for 2023 to 32%. That's the sharpest first-half jump in the tech-heavy index since 1983, when the Nasdaq rose 37%. Soloway points out that the current pattern bears resemblance to the dot-com bubble, where a similar drop and rally occurred. Gareth emphasizes that a crucial factor to bear in mind is the substantial presence of big technology companies in the overall market. Approximately 50% of the Nasdaq index comprises these tech stocks, and their influence is also significant on the S&P index. We would like to share some highlights from the discussion with you. Before we continue, please remember to subscribe to the channel and click the bell icon to receive more updates.
This is the tech stock sentiment. And so the last time we were this high on tech stocks was in the dot-com bubble. And so you basically, now there you were higher. It did go higher than that quite a bit when the dot-com bubble hit. But just interesting to see that we have not been that high going all the way back to the dot-coms. And the one thing I would just say in regards to these big cap tech is that they have become so mammoth in terms of their market cap relative to the rest of the market that now you have the Nasdaq 100, and basically 50% of the Nasdaq is these stocks. The S&P is about 25+%. And so the reason why that's a concern, because when things are good, it's great, right? It takes the whole market up with it. If you're in an index fund, you're doing great. The problem is that if these things correct, and if you look at historical PE ratios, and this is something that a lot of people don't kind of realize because they're newer investors, but when I was growing up in the 2000s to 2010s and I'm just getting into trading, in a recession, the general PE ratio for a large cap tech was 8 to 10. Well, you have Microsoft over 30, Apple at 30. Like, I mean, there's a lot of froth there because these stocks have been utilized as kind of a safe haven, and they've become so dominant that, again, there's a huge risk there. If all of a sudden those stocks come in, the market could go down 20% in a flash. Is that if we look at the NASDAQ 100, or excuse me, the NASDAQ composite, last time I believe I talked about how the pullback, let me see here. Yeah, I believe this is correct. So if you take the low to where we currently topped out, look at that. So we dropped 37% and change, and we have rallied back 37% and change on the chart. So if you look at past cycles, the dot-com did this, where almost identical. Before it rolled over in the dot-com, I think the NASDAQ fell. And in fact, let me go back and we could just take a look at this here. Let me go to the weekly.
Yeah, I think it was like 40 and 40, right?
Yeah. So that's that. This is by the way, this is the financial crisis, and it wasn't as much tech related. So again, you still had the same sort of bounce, but it wasn't equal. It was 18% versus a 23% drop. But if you go back here, I mean, this is, again, just freaky stuff. You had a 41% drop, 41% rally before the rollover. So it's very fascinating to look at the NASDAQ and be like, wait a minute. So we fell 37% and change. Now we've bounced 37. And now all of a sudden the NASDAQ's starting to struggle a little bit. So just cool stuff.
Over the last month, a coordinated attack against altcoins by the US SEC caused Bitcoin dominance to surpass 50%. Above the psychological level makes Bitcoin more valuable as a whole than the entire crypto market. In July 2022, the price of Bitcoin experienced a significant decline, falling below $10,000. During this time, there were concerns and doubts about the future of Bitcoin among many individuals. However, according to Soloway, people's optimism regarding Bitcoin remains high, comparable to the levels observed when Bitcoin reached its peak price of $69,000. Litecoin, introduced in 2011 as a separate branch of Bitcoin, has recently gained recognition. It has been chosen as one of the 4 cryptocurrencies available for trading on the EDX Markets exchange. Litecoin led the gainers with a 6.37% increase in the last 24 hours to $112.96. The token surged 27.98% in the past 7 days. According to Soloway, the significant move made by Litecoin is impressive, and it presents an opportunity to consider buying it when the price pulls back. He also acknowledges that some individuals might prefer to stick with Bitcoin and Ethereum as their preferred cryptocurrencies.
Bitcoin dominance is still going higher. I know you're in the same thought process of that. And I think what investors need to recognize is that last week we got the SEC to say that the Bitcoin ETF filings for the spot were inadequate. And so just naturally, that's going to make Bitcoin investors a little bit more hesitant. And then I also think you have a lot of speculation. I mean, just going back to the stock market and tying the stock market in right now, the stock market has been so strong, like every day floating up, that eventually what people do is when everything, like you're looking at some of these stocks that have just gone parabolic, they start to look for what hasn't run. And so I think there's just this natural thing of saying, oh, well, these altcoins are so low, I'm just going to give it a shot, which just creates that little bit of a bounce. So you have the negative of Bitcoin with the SEC, even though it wasn't that big of a deal, saying that the ETFs were inadequate. And then you have this kind of risk on kind of thought process where you're then pushing the alts up a little bit. So at least for me, that's kind of where I am at. I still remember 2017, the ticker of Bitcoin was at the bottom. They always talked about it. And then by 2018 into mid to late, they removed the ticker and didn't say a word. And at that point, you had Bitcoin below 10K, it was in the 76543 level. And it just was like, no one even, like, people were questioning whether it would survive. And maybe this time's different, but to me, we haven't seen the washout yet. You still have, you go on crypto Twitter, people are just as bullish as they were at 69,000 at this point. With Litecoin, I mean, amazing move. And again, I think partially it's the halving, and then also partially it's probably one of the few other coins that's classified in the Bitcoin realm of not being a security, but in that kind of same commodity-ish area. In terms of the move up, this is the daily chart, and we can see it went right up into this resistance level, which is a pivot from right here. For one, I think also, let me just see here. I want to draw another trend line from this low here to this high. Yeah, you can see. So there's a confluence of resistance levels up in this 112 level. So once you make a move like this, for a technical trader, you never want to chase it, number one. Number two, it needs to digest the move. So you're essentially looking for a bullish consolidation move, which would be kind of like a 45 to 90 degree angle. Kind of like what we were talking about with Bitcoin dominance maybe happening, that consolidation, right, where it had a big run. Now it needs to kind of digest the move before it can make that next move up. So amazing move on Litecoin. I mean, I don't know if you have any insights into that. Like would this be something that you would be a buyer on a pullback, or you're kind of like, nah, I'm sticking to Bitcoin, Ethereum, and these?
After a jump that followed a raft of Bitcoin spot ETF applications in the final weeks of June, the world's largest cryptocurrency by market capitalization has lost direction, adding just 0.61% over the past 7 days. While in the age AI boom, there is a growing concern about the possibility of a repeat of the dot-com bubble in the NASDAQ 100. The NASDAQ 100 experienced impressive gains of approximately 37% in the first half of the year, which is its strongest performance since 1999, over 2 decades ago. Are we in for a repeat of the dot-com bubble on NASDAQ 100? We encourage you to share your views in the comments section. If you found this content informative, please give it a big thumbs up and subscribe to our channel for the most up-to-date news and videos. Thanks for joining us.